Okay, class, I am going to attempt a help video for you guys for this question here. This is one of your homework questions. It's giving you an inventory record, telling you that we have a beginning balance. We've made some purchases of inventory. We've had some sales of inventory, another purchase, and 2 more sales. And it's asking you to calculate the cost of goods sold, the ending inventory, the gross profit for the month under the Fifo method. That's the first in, first out method. And all it's wanting you to give the answers to is the ending cost of goods sold for the whole month, the ending inventory at the end of the month, and the gross profit for the month. So you just have these 3 numbers to enter, but there's a lot of calculations that are going to go into coming up with these 3 numbers. And so I wanted to go through and give you guys an example of this. And so again, when we're looking at this information, this is the beginning inventory, this very first amount. We're looking at the month of May. And so this beginning balance is the inventory that was left over from the end of the last month. So we had 60 units. They cost $12 a piece for a total of $720. So I'm going to walk through a different example. This is one that's in your my math homework. And I am going to pull up an Excel spreadsheet. And this is posted in Blackboard for my students. For other students, it's just something that you'll just have to look at. And so I have an example here. It's similar to the one that you're going to have in my open math, but not exactly the same. But you should be able to get the gist. And again, I'm asking you for similar information. These are the 3 pieces of information that my open math is asking you for down here: cost of goods sold, gross profit, and ending inventory. But in order to get the gross profit, you also have to calculate the sales. So I've added that to my list of questions down here. And then I've also got here, this is known as a perpetual inventory record. And you'll have to do this calculation on a separate piece of paper. Or you can, again, go in Blackboard and you'll find this inventory record in Blackboard for this particular week. But you can very easily do these calculations on a piece of paper. I'm just doing it in Excel because it's easier for me to record that way. And so you'll see here our example here is for January. We have beginning inventory, and that was left over from last month. So I have 160 units that cost me $24 a piece. And so when I do that math, 160 times 24, that gives me $3,840 total. That's what I'm starting January with. And so I went down here and I filled this in to my inventory on hand. You can see here I've got 3 columns, and my columns aren't really lining up like they should. Let me fix that real quick. So I've got 3 basic columns here. I've got a column for all my purchases. I've got a column for when I sell goods, so I can figure out how much those goods cost me under the Fifo method. That's the one we're using for this example. And I can figure out what inventory I have left on hand after any purchases are made or after any sales are made. So I'm starting out with this beginning inventory that I had up here in this chart. So basically, I'm just going to take everything that I have here and I'm going to fill in all this information so that I can come up with these numbers at the end. So let me just go ahead and walk through. So then I start off with my beginning inventory, and then I have a purchase. I purchased 70 units at $26 a piece. And so I'm just going to fill that in, 70 units at $26 a piece. That's $1,820. And I just bring that over, right? I still have my beginning inventory, and I have my 70 units at $26 a piece. So this is what I have, excuse me, right now. And then on January 8th, I had a sale. I sold 80 units, and I sold them for $35. But what we're trying to figure out is how much those units cost us. $35 per unit is what I sold them to the customers for. Okay, so that's not what they cost us. I need to figure out for my records, for my accounting records in my business, how much these 80 units cost me when I purchased them. I'm going to sell them to the customers for $35, but how much did they cost me? And so I'm assuming that I'm going to use the Fifo method here. Okay, so first in, first out. So these are the units that I have right now, right before this sale was made. And FIFO tells us first in, first out. So the very first units that came into my inventory, I'm going to be the ones that I assume that I sold first. So if I'm using first in, first out, I'm going to assume these first units here, these ones from ending inventory, are the ones that I sell. So all 80 units are coming from that very first beginning inventory batch, because those are the first ones that were in my inventory. And then you got to figure out, what do I have left over? After this sale, after these 80 units, what do I have left on hand? So I had 160 units, at $24 a piece, and I just sold 80 of them because we said first in, first out. So now I've got 80 of those left, and I still have the 70 units at 26 because I didn't sell any of those. If we have first in, first out, those are still sitting there, those 70 at 26. So now this is what I have. I'm just going to color code that with a different color so it's a little easier to see. So now this is what I have left on hand after that sale. And so you can see here that those 80 units under the first in, first out method that I just sold for $35 a piece, under first in, first out only cost me $24 a piece. Then on January 15th, I purchased some more goods, right? I purchased 45 more units at $27 a piece. And so that gives me a total of $1,215. So now I have to figure out what do I have on hand now after that purchase. I still have the 80 units at $24 a piece. I still have the 70 units at $26 a piece, and then I've just purchased the 45 units at $27 a piece. So now what I have on hand after that purchase are these units highlighted in this light blue. Okay? And you just keep going down. January 22nd, I purchased 25 more units at $28 a piece. So that's a total of 700. And I just bring down what I had from before, right? I had 80 at $24. I had 70 at $26. I haven't sold any of that. I had 45 at $27, and I just bought 25 more at $28 a piece. So now what I have on hand after this purchase, let me highlight that in a different color. I'm going to run out of colors here. And this kind of khaki green is what I have on hand right now. Okay, so our next item on January 25th is another sale. I sold another 60 units for $35 a piece. But again, this is what I sold those units to the customer for. This is the sales price, not what it cost me. And remember, when you're selling goods to a customer, you always record the sale at the sales price, so that would be the $35, and then I have to record moving those goods that I just sold out of inventory into cost of goods sold for whatever they cost us when we purchased them. And so now I have to figure out how much these 60 units cost me under the Fifo method, right? Because that's the method it's telling me to use to calculate my cost of goods sold. So Fifo again stands for first in, first out. So I'm going to assume that these 60 units that I sold came from the very first ones in my inventory. So when you're bringing down your inventory on hand, make sure you're always putting these in chronological order because it's going to make a difference. Under first in, first out, you're starting at the top and working your way down. Okay, under LIFO, when we get to that in the next example, you're going to be starting at the bottom and working your way up. So you have to keep these in chronological order. You can't just willy-nilly write these in however you want. So that when you're taking these first ones in, they are actually the first ones that were sitting there in your inventory. And so if I sold 60 units, I look at the very first items that are sitting there in my inventory. I still have that some of that beginning inventory left, these 80 units, $24. So I can take all 60 of the ones that I just sold from there because I have 80 of them. So I can take 60 of those and I still have 20 left. And then you just have to figure out what you got on hand still after that sale, right? I sold 60 units at $24, so I still have 20 of those left because I had 80 and I sold 60. So I've got 20 at 24 left. I've got 70 at the 26 left. I've got 45 at the 27 left and 25 at $28 a piece left. So now after that sale of those 60 units, let me see if I can get a different color here. This light pink color, this is what I have left in my inventory after this sale of these 60 units. So now I've sold 80 units on January 8th. I've sold 60 units on January 25th. And then my very last transaction for the month is selling 100 more units. And again, I'm selling them for $35. That's what I'm selling them to the customer for. But I have to figure out how much these goods cost me when I purchase them. And we're going to assume that these 100 units are going to be costing out using the FIFO method. So again, first in, first out. So I'm just going to keep going on my list until I get to 100 units. So now I've sold 100 units. So I start at the very top, right? This is what I have on hand right now, these items in light pink. So I start at the top. I've got 20 units at $24 a piece, and I keep going till I get to the 100 units. The next item, so now all of these are gone, right? I've sold all of those. So technically I could just take those right out because I've now sold all those. The next layer or the next purchases that I had, the next one that came into my inventory are 70 units at $26 a piece. So 70 at 26, but that only gets me up to 90 units, right? And I actually sold 100. So I can really delete all of those now as well. because I have now sold all those too. And now I need 100 units and I've only got 90 here, so I need to sell 10 more. So I'm going to take 10 from this very next purchase that I had. So 10 at $27 a piece. Oops, sorry, I hit something that messed me up there. 10 at $27 a piece. Okay, so then again, you have to figure out what you've got left at the end. After this last transaction, after this last sale, what inventory do I have left on hand? Well, I sold all those beginning inventory ones. I sold all of those ones from the January 5th purchase. And I sold 10 of these, right? 10 of the ones at $27. So if I had 45 and I sold 10, I've got 35 of those left. And I still have all of these left. I didn't mess with those. So when you're using the FIFO method, what you should have left at the end are those most recent purchases. Okay? And so now we know, now we have all of our inventory record filled out. And again, you'll have to do this on a separate piece of paper. Or you can set up an Excel spreadsheet just like this if you want to. And let me highlight what we have left here in a different color. Let me see, let's try green. Okay, so this green is what I have left at the end. So that's going to be my ending inventory. If I add these two together, I have 35 units at $27 a piece and 25 units at $28 a piece. I have those, how many units is that? 60 units left. And so if I add this together, right, so I'm just going to add $945 and $700, and that's going to give me my total ending inventory. And this will give me my total number of units, right, 35 units plus 25 units. So I've got a total at the end of the month of 60 units that totals $1,645. So I'm just going to fill in $1,645. Okay. The next thing it asks you is for your cost of goods sold for the month. Okay, you've got this cost of goods sold column and you figured out how much these 80 units cost you when you sold them, how much these 60 units cost you, and how much these 100 units cost you. But what's asking you here is your cost of goods sold for the whole month. So what you have to do, again, is do a calculation for the month where you're adding up all these costs for the whole month. So I'm going to do a little calculation here. I'm going to add up 1,920 because that's what those 80 units cost me. 1,440 because that's what those 60 units cost me. And then I'm going to add up all these little costs here for the 100 units that I sold on the last day of the month. So all I'm doing is adding up all of my cost of goods sold for all of the units that I sold during the month. And that's going to give me my total cost of goods sold for the month. And I could do the same thing here. I can add up the total number of units that I sold. So if I look at my totals down here, let me bold these so they're a little bit easier to see. Right, I have total ending inventory of 60 units. That totals $1,645. So when I look on my balance sheet under the FIFO method for this particular company, I should see $1,645. And when I look on the income statement for these 240 units that we sold, I should see $5,930 of total cost of goods sold. Under the FIFO method, where we're using first in, first out, we're assuming the first items that came into inventory are the first ones that are sold every time we make a sale. We should see $5,930. So the other thing that the problem is asking you for is gross profit. And if you remember back from the last chapter, gross profit is net sales minus cost of goods sold. Oops. So that's what gross profit is, right? And net sales is your sales minus your sales discounts minus sales returns and allowances. And in this particular problem, we don't have any sales discounts or sales returns and allowances, so we can just say sales minus cost of goods sold equals gross profit. So you have to figure out what your total sales are, subtract it from the cost of goods sold that you just came up with for the whole month to figure out what your gross profit is for the month. So even though the problem is not asking you for sales, you do have to calculate sales in order to calculate the gross profit. And so I kind of have a little calculation up here, right? We had 80 units that we sold. So the items in green are the items that we sold, and the items in green over here was what we sold them to the customer for. So if we do the same kind of calculation, we had 80 units that we sold on June 8th, and we sold them for $35. And all this is doing over here is multiplying this. 80 units times $35 is going to be $2,800. So when I sold those 80 units, I sold them to the customer for $2,800. but they only cost me $1,920. So the difference between the two, right, the $2,800 I sold it to the customer and the $1,920 that they cost me when I bought them is my gross profit for that one particular sale. But the problem is asking me for my gross profit for the whole month. So what I have to do is figure out my sales for the whole month, right? The next sale was on January 25th. I sold 60 more units, and I also sold those for $35 a piece. So those 60 units were sold to the customer for $2,100. They only cost me $1,440 when I bought them. And then I sold 100 units on January 31st at $35 a piece. So those 100 units I sold for $3,500, and when I add up this total cost of goods sold, they cost me $2,570. So my sales for the whole month, if I were to build an income statement for this particular company, would show $8,400, right? I sold 240 total units at a sales price of $35 a piece. So that's $8,400 worth of sales. So I plug that in down here, $8,400 minus what those 240 units cost me, right? I calculated as we were going through what those 240 units cost me. And we said those 240 units cost us $5,930. And we can use the formula that we've already learned, sales minus cost of goods sold equals gross profit, to come up with our gross profit. So if our sales are $8,400 and we subtract out $5,930 from our cost of goods sold, that'll give us our profit that we earned. And then you can go back to My Open Math once you've figured this out on a separate sheet of paper, and you can fill those numbers in. And your numbers will be different here because these numbers are different from my example. But all My Open Math is asking you for are these numbers down here, right? These three numbers, your cost of goods sold for the month, and that's the cost of goods sold for all of the sales for the month. So once you figure out each one, then you just have to add them all together to get the total for the whole month. Your ending inventory, so you have to figure out your inventory on hand after the very last transaction and add all those inventory items together to come up with your total inventory for the end of the month. And again, it would just be the items that you have left after the very last transaction. You're not adding all these columns down because we're keeping a running total after every transaction of what we have on hand after each transaction. So you're not having to add these all down like we did the cost of goods sold. And then the last thing it's asking you for is gross profit. And again, to determine your gross profit, you're first going to have to calculate your total sales for the month. And all you have to do is go back and take your number of units you sold times the sales price, number of units you sold times the sales price, number of units you sold times the sales price, and add those three sales together to come up with your total sales. Then subtract your cost of goods sold from that to get your gross profit. Okay, I will show you one more very good double check, if you will, for a problem like this. It's a total cost of goods available for sale. And let me write the formula down here. Cost of goods available for sale equals your beginning inventory plus all your purchases. Okay, and so if we look at the problem up here, the very first problem, we've got our beginning inventory of 3,840. We've got a purchase on January 5th, a purchase on January 15th, and a purchase on January 22nd. And so if we add those all together, all I'm doing is adding all of these totals right together, right? Our beginning inventory plus all three purchases that we made. And I get a total cost of goods available for sale of $7,575. Let me highlight that in yellow. Okay, so that's my cost of goods available for sale. When you get done calculating your cost of goods sold and your inventory on hand, these two numbers should come back to your cost of goods available for sale, right? Because these units that I have in beginning inventory plus all my purchases, they're either sold at the end of the month or they're still sitting there as inventory on hand. So this $7,575 has to agree to these two numbers added together at the end. So that's one way you can double check. In My Open Math, obviously when you fill the numbers in, right, and you hit submit, it'll tell you whether you're right or wrong. But on a quiz or a test, you're not going to have that double check, right? You're not going to be able to submit your answers and have it give you a check mark or an X. So this is a good double check that you can go through every single time. If you add up your beginning inventory plus all your purchases for the problem and come up with the cost of goods available for sale, when you get done with all of this math, because this is a lot of math going on here, you should double check. You should add these two numbers together, and I'm going to do that right now. 5,930 plus 1,645, and you should come back to the cost of goods available for sale, right? These should always agree. So that's a good double check for you. $7,575 was my cost of goods available for sale at the beginning. And then when I add my total cost of goods sold and my inventory on hand at the end, it comes back and it agrees. So again, if you're doing this for a exam or a quiz and you don't have that double check of the math giving you the check marks, it's a good way to double check yourself. Okay, so that's the FIFO method, and I will do more videos for LIFO, specific identification, and weighted average.